Hi, I'm Yiorgos Allayannis. I'm on the finance faculty at the Darden School, and I'd like to tell you about the first module in my new course in financial institutions and capital markets. So there's three modules overall. The first module is about financial institutions, and it takes you, each case can stand on its own, but also following these cases you can sort of build as you move from one case to the next. The beginning is a case about bank valuation. It's a simple case on Comerica in the midst of a crisis in September 2008, and the role is to value Comerica in this very difficult moment in time through multiples valuation as well as a dividend discount model valuation, but also more importantly understand what are the important variables and metrics that the analysts in the market look when they analyze banks? For example, metrics for credit quality, for liquidity, for profitability, for capital. That day also there's a technical note that has been added as well in the reading to help with the preparation. The next day I talk about I teach a case that looks into capital and how banks use capital as a way to grow, and it's a case about a merger and the trade-offs between paying for this merger with debt versus equity, and what that means for shareholder dilution versus capital. And of course, students learn about the different types of capital: Tier 1, Tier 2, total capital, tangible equity, what that all means, and what the emphasis should be on. The next case is about risk management. It's a case that is set in Korea, and it's set during the Southeast Asian crisis in 1997-98. And it's about Korea First Bank. This is a case that students identify and measure and different types of risks that Korea First Bank faced during this huge episode, and try to make some sense as to which one is the most important, starting from market risk, liquidity, interest rate, currency, operating risk, and try to make some sense as to which are those risks that should be managed and how, and where should Korea First Bank start. The last case in the module is about John Thain and Vikram Pandit when they took over two legendary financial institutions, Merrill Lynch and Citigroup, in the fall of 2007. The case is set a few months later when the two leaders have started to make some changes and try to understand as to which businesses should stay, which businesses perhaps should go, what are the weaknesses that these banks faced at that time, and how they should restructure and rethink the entire process of risk management. Something that perhaps was not as strong, that led those two banks in the situation that they found themselves in, and also finally their efforts to raise capital through sovereign wealth funds. By the way, I wanted to mention, of course, all these cases come with a teaching note for the instructor, which lays out the process with which I teach the case, the questions that I ask, and the potential solutions of the case, and sort of the whole philosophy of how to go about teaching the case. Of course, you're more than welcome to come and see me teach the case as well at Darden.